Hello, everyone. We will give everyone just a few seconds to get logged in. The attendance numbers are climbing. Ben, you want to go ahead and just throw in the chat how to reach you, and we'll reference it during the call.
Got it.
All right, numbers are still climbing, but we're going to go ahead and get started. So, welcome to the SIP. Much like catching up over coffee or an adult beverage, the SIP is about connection, bringing lender members and partners together to exchange ideas and solve industry challenges. It's a space for collaboration, showcasing real world case studies that highlight the power of working together. The SIP supports our TMC's mission to foster a collaborative and innovative environment that empowers our members to grow, thrive, and positively impact the companies and the communities that they serve. Collaboration fuels progress, so pour a cup, settle in, and elevate the industry together. I think we might have to change the timing of this because I never seem to, it's not like my time of day to have a cup of coffee or a cocktail. So I'm like sitting here holding some warm water in a fall mug, which it very much feels like it is today. But thank you to all who have taken time out of their very busy Monday happening on a Tuesday. I hope you all had a fantastic Memorial Day weekend and took some time to honor those who paid the ultimate price for our freedom and for our safety. So today's episode is proudly sponsored by Matic, the leading insurtech platform for the mortgage industry, represented by its co-founder and CEO, Ben Madick. Ben, welcome.
Thank you.
Where are you joining us from today?
I'm in sunny San Diego.
That's amazing. I thought for a moment that you may be in Columbus soaking in some, which it wouldn't be sunshine, but some of the Memorial Tournament festivities that are happening at Jack's Place this week.
We're headquartered in Columbus, and I'm sure there'll be a lot of our teammates there and partners there this week. Maybe the first one in many years that I wasn't there, but my daughters are very young, and I want to be home this week with them for what they've got going on.
For all of those listening that are from Ohio, they know the tournament. All golfers know the tournament, but those from Ohio will know that with the Memorial Tournament comes rain, and it is living up to its promise. So it's a little dreary here today, but hopefully they'll get some nice weather towards the end of the week. We're going to talk about California in just a moment, so I want to hold where you're located. But for those unfamiliar with Matic, what solutions do you offer and what mortgage industry problems do you solve?
I mean, I think the history of Matic is all about solving problems for mortgage. Matic short for automatic insurance, which I could tell you the rest of the story later. But essentially, what we try to do is simplify the insurance process for lenders and servicers. We identified the problem when I was working in my previous firm in mortgage and seeing loan closing delays. The customers may already have the data, but the data doesn't get back into the LOS properly. And if they don't have insurance, they need it, they have to get it. And most of the information you need to apply for insurance comes as part of the mortgage. And so I thought, like, why don't we just leverage the data that's already here and not require the customers to do the same thing multiple times and make it really easy for the processors, the underwriters, and everyone involved. And so we've been doing it. Identified the issue about 10 years ago. We got live 7 years ago or so. And kind of today, we just focus on personal P&C insurance. 90% of what we do is inside of mortgage servicing and mortgage lending. We sell customers, bundles, so home and auto and flood, umbrella, pet, a little bit of life insurance as needed. But the goal is to really make the home buying experience and home ownership experience from origination through life of loan meaningful for that customer. And as rates continue to rise and insurance and affordability becomes an issue more and more, being able to reshop and buy different insurance over time has become more important. And that's a key feature of what we do inside of servicing. To power it, we have almost 60 insurance carriers on the platform, super unbiased, because we kind of don't manually go through and figure out who we're going to get paid for the most selling. It's about how much can we save the customer, how can we help support them, um, and mortgage has been a great place for us. We have over 100 lenders and servicers and banks that we service and process their loans, both origination and servicing, and almost 25% of mortgages in the U.S. Kind of flow through our system, both origination and servicing.
Yeah, it's interesting for the first time home buyer. So not only do they have to try to educate themselves on what a mortgage is and the process of going through that, but they're also having to navigate another very complex transaction, which is for their insurance needs. So very scary times being a first time home buyer, but I know that your partnership over the years has provided a lot of solutions and really helped lenders through that. So you talked about California, and it seems like California is the hardest hit state when it comes to insurance and really natural disaster in the past year. What insurance problems have you dealt with personally as a California resident?
Well, California is a disaster for insurance, and there's a lot of reasons why. It's very complicated, and it was complicated even before the sort of fires that we had in Southern California earlier this year. I mean, on a personal level, I moved into my current house in 2019. I got the home. I run an insurance business, but sometimes I feel like I don't know everything to know about insurance, and I needed support and help. And I got a policy from one of our teammates at our company, and I paid $1,100 for it. I have a really generic track home in a mass-produced area, and I've been over the course of the last, what is it, 5 years, non-renewed, which means canceled by the carrier 3 times, 3 different carriers. And non-renewals happen usually because the carrier wants to exit the state or exit the risk type. I don't live on the beach. I don't live like in the forest. I live just like a regular suburban home. But the carriers don't want to stay in California for the regulatory environment and some issues going there. So, after getting canceled 3 times, I had to go find something else, and I now pay over $8,000 a year, and I have what's called an excess and surplus product, ENS, which means it's not overseen and approved by the state, and I take counterparty risk. So if the carrier's not there to pay the claim, that's on me. And by having an admitted product, not one that's considered excess, the state is the backstop to make sure that claims get paid and that there's financial stability in the carrier market. So, that trend, what I've had to go through has been popping up over the whole country. We're seeing a lot of excess and surplus carriers coming to markets, Florida and Texas, and other places, especially in California. And it's difficult. Sometimes they don't always meet the lender requirements or the GSE requirements. More importantly, like I don't know if my carrier will be there if I have to file a claim. So it's been a very tough market. I went from having barbecue conversations with neighbors in the cul-de-sac about, what your kids are doing to how do we get insurance? And I think that's a common discussion now. And it's not just because I'm in the insurance business.
Yeah, that seems very trying. And for any of those that are listening, any questions or comments that you have, please post in the chat. I know all mortgage lenders have it's a concern that they have had to address, whether it is from making sure that their servicing portfolios are insured, that the homes within them are insured, or in just dealing with the standard transactions. And many times those cost of insurance policies are putting home buyers out of reach from a debt to income ratio perspective and trying to provide solutions to the home buyer to make sure that they can secure financing within their reach. Um, I know Matic works with IMBs, credit unions, and banks, but that's a wide range. Would you say that there's anyone in the mortgage space that could or should consider collaborating with Matic?
I mean, I think from processors and loan officers and underwriters, we have a suite of products to help them do their job, like getting the product, getting a policy for the customer quickly, but making sure it meets guides and um, doing all the reviews of the carrier oversight, make sure they meet requirements of the GSEs. I think anyone that's in the mortgage space, whether you're originating, owning, servicing, even if you're just an MSR buyer, we have partnerships with those types of companies. Each size and scale of the organization is a little bit different, but our number one goal is to simplify insurance for these parties. This is your customer, it's your experience and what sort of you do. And our job is to simplify that part. So we integrate into a number of the tech stacks that are already out there. We have loan officer tools and broker tools. You could just go and become the hero to your customer by helping them get the right policy and delivered at the right time and price. So any one of those sort of constituents in the space, we have products, services, and relationships to support you.
And they can generate ancillary revenue off of those, correct?
Absolutely. I mean, it's a major part of our program is to sort of pay and share revenue with our partners. There's a lot of regulatory issues. Obviously, RESPA comes into play. And a lot of our team comes from mortgage regulatory background and mortgage. So we've kind of worked through that. Insurance, you need to be licensed in order to receive funds. But there's plenty of ways in which we can support you. But I think revenue is important. It makes it so that it's, you have skin in the game. And we've designed sort of our platform and our relationships to say, look, as a lender, you can build your own insurance, but doing mortgage is hard enough. Let us do this really hard insurance thing. And you should be able to make the same amount of returns by partnering with us as if you were to build it. And that's sort of the way that we've set it up. But I think that if you are just looking for revenue, it may be tough. I think what you really have to think about in the way we come into play is by supporting everyone in your organization. It's not just revenue generating, it's also cost saving because, the back and forth with the customer takes time, the underwriting, the processing, the re-review, making sure it meets the guides. We handle all of that, sort of make sure that it's automated. And I think processors and underwriters end up loving us the most because we make their job easy and save money because it saves time on that as well.
Yeah. Yeah. Ancillary income or revenue in this market is definitely a compelling reason to integrate with the services. But in every scenario, is it required that the lender is or servicer is a licensed homeowners insurance? They have to carry their homeowners insurance agency licensing to be able to tap into those economics.
Yeah, from a revenue perspective, you have to have those licenses in place. It sounds like daunting. It's actually not that hard. We have a whole regulatory environment in our organization to help your team understand it and see it. We've worked with hundreds of partners already. There's partners at TMC who support those actions and can get those licenses in place, or we can refer you to others. But the licensing part is required by law. I didn't make it, but I
Yeah.
can sort of support it. But as long as you have those licenses, we're glad to pay your share.
Yeah, we all know what it's like to deal with RESPA compliance. So we know the headaches and we have learned how to deal with it. I did do some research in the space and compared Matic to some of your competitors. One thing that really stood out to me was savings Matic delivers per policy. What is the average annual savings for Matic's policyholder?
Yeah, I mean, it's changing every year, but right now we're over 800, pushing almost 900 on savings on an annualized basis. And that stat comes from a review of our service customers or customers that are in mortgage servicing where we know their policy beforehand and then get them a different policy in their hands. I mean, we're saving thousands of dollars on those customers, supporting DTI reductions, and escrow too. You think about it, every year your escrows go up because taxes and insurance usually go up. So when you get that letter in the mail, you can also get policy options from us. And on average, that's saving over $800, and that's like-minded coverages. I think the really important thing for somebody in the mortgage space to know about insurance is that the way that carriers price is to try to reach price adequacy, meaning they want to be able to cover their claims on an actuary basis. If they collect 100 million, they want to pay 100 million. They don't want to make, 100 million in collections for premiums and then pay out $5 in claims. Like that doesn't work for them. It's supposed to be adequate, sort of equal. So the way in which they set their pricing, a big component of it is the losses that they had last year. So from a customer's perspective, if you didn't have a claim, but the carrier's portfolio did, your price may go up. And so sort of the opportunity to best execute and shop every year is, as a consumer, what's going to bring you the best policy at any given time. And a typical insurance broker or agent isn't going to do all the hard work to try to switch you, because they're going to make less or have to do work to just make the same amount that they would if
Yeah.
they did nothing. So our entire platform is built on saying, what can we do to simplify this for the customer, and automatically reshop for that too. And that's why we see those large savings is the ability to deliver that with accuracy and speed.
And that's through the competition with the 60-ish carriers that you currently have. You're automatically rotating the data through to when renewals come to see who has the best price at that time.
Absolutely. So we have a sort of program and product called Rate Review. Customers are automatically enrolled in it, or can enroll in it if they're not part of the automated enrollments. But we're constantly behind the scenes looking for better options and rates. And we won't tell you like, hey, you should shop or switch unless we know that there's something better for you. And so, there's not 60 options for every customer. 5 years ago, 6 years ago in California, when I moved here, I had 5 or 6 quotes, and this year I had 0, and had to go like beg and find a policy. It's different in every state. On average, the number of carriers writing policies today in every state is down quite a bit from the highs, but we've now come off the lows, and the market is starting to get a little bit better across the board. And we anticipate that continuing over the next couple of years.
So I didn't know this, and you mentioned it before, but Matic stands for automatic insurance. So talk to me about the workflow automation that a lender would anticipate when adding Matic to their services.
There's so many different ways in which we can make it automatic. You have to really kind of think about the different constituents. So from a customer experience, we're going to take all and leverage the data that you already have in your LOS or POS or servicing core system, and use that as the base to start the process, so that the customer doesn't even tell you your name, your address, your birthday. Like we have that, right? And the benefit of that being integrated, the lender looks better too, right? Because they're not just passing a lead off, they're really kind of embedding this service inside of their system. But then every customer can go through a completely digital experience. They can quote and shop amongst all those carriers in seconds. You click shop, since we already have the data, it takes, seconds for you to see as many quotes as we have available. And you can go through and buy right there. We also have an in-house team who can answer the phone and answer questions and support you through the experience. And then on the back end, I think this is where sort of the automation comes into play. We've spent tens of millions of dollars building, it's like a full suite of tech. And you can think of the comparison in mortgage. Like we build our POS, LOS, pricing engine, all of it, we home grew for insurance. And so the back end, we streamlined the process, delivering the rate, the policy documents to the lender, the servicer, issuing the sort of RCE, the replacement cost estimate, which has been a hot button after the GSEs changed their guides last year. That's automated. Also running it through Rules Engine, making sure it meets all the GSE guides. All of that is sort of automated on the back end for all of our partners, should they want it. We do have a partner who asks for faxes, so we fax them the policy. Not automated, but that's what they want. We pass it to them that way. And in all that ends up being about a 2-day reduction in closing time on all loans, not just the ones that we touch in your sort of closed timelines for that cycle. So lower interest costs, lower hedge costs, all the things you want. You can kind of see that too, just from all the automation that's built in our programs.
Yeah, that's interesting. It frees up more time for the team to work on, even if people aren't choosing to go through that insurance avenue. It's freeing up time for employees to be able to work on those who go through other means for homeowners insurance. So, great point out there. Beyond revenue and automation, are there any other reasons that mortgage lenders should partner with Matic?
I mean, I think the number one thing is that we're built for partnerships. We're not a direct to consumer competitor. We're not taking your leads and passing them to our mortgage division, right? A lot of insurers have mortgage divisions, even brokerages have mortgage divisions, and they're using it as a flag to be able to sell customers. So we're going to keep this inside your ecosystem, make it one of your customers. We have 50 states, every market, plus there's a couple territories we're licensed into. We need more than 50. We have a ton of industry experience in mortgage and all the tech. I mean, I think the greatest part about all of it is that our NPS score is 90. We've sold over 250,000 customers in mortgage the last 7 years, and our NPS score is over 90. Like, that is very high. It doesn't matter what
Mhm.
industry you're in, you can understand that. And I think that benefit flows through to the lender or the servicer because the customer thinks of them as the one who got them this great experience.
Yeah, definitely. 90% of your customers come from mortgage partners, and it's safe to say that you are mortgage experts and you get mortgage. Um, can you share some insights about the experience of your team and why it matters when they're working with lenders?
I mean, the intersection of insurance, which is highly regulated, and mortgage is highly regulated, is probably dumb of me to have built because it's like so hard. But if you think about sort of, I've spent more time in mortgage in my career than I have in insurance. A lot of our executive team comes from mortgage as well. um, Legal compliance, accounting, like all of this is a team built around mortgage and supporting customers. We understand the personalities of LOs, and if it's a new LO versus a rainmaker that's been around for a long time, or sort of a broker on their own, right? So each of those sort of personalities, they kind of work differently. They want different tools and resources, and we've got all of that on all of our teams. I mean, and all the GSE rules, like all the rules engines that we built are just to make sure it meets the guides. And if you have overlays, we add the overlays. If you have multiple brands and branches and different names, like our systems are set up for that so that it's not sort of stuck at like the parent brand and name, right? We know in our
Yeah.
industry in mortgage, you have sub brands and different branches operate differently. So each one of those tools are built. And it's just because we sort of come from mortgage, and from day one, we were built for mortgage.
Well, and I think it's very important. And oftentimes people think that innovation has to be some big, hairy, audacious idea that no one has ever thought of. But what is most valuable for lenders, and having been a lender, is closing the gap and solving the problems on the things that are repetitive. And on every single loan, homeowners insurance is part of that. So it's very important. And it sounds like you have leveraged a lot of automation and a lot of technology within that, but you're solving a very practical problem for the industry. Um, you talked about the NPS score being over 90, and that's absolutely remarkable, especially in these times, because I think sometimes people associate difficulty in the market with the services that they receive, and sometimes that can fade down during challenging times. How do you think that you achieve that, and why is it? You mentioned a little bit about why it's so important for lenders and partnering with Matic, but if you could dive into that, that would be great.
I mean, I just think our focus as a company has always been on what's best for the customer. Um, if you think about sort of what is the experience, it's your customer. They're going to be your customer for a long time. You're going to remarket to them. I want to help everyone, but if we can't, right? Let's say the only product available in your state is State Farm. We're an independent agency. We can't offer State Farm. State Farm reps only offer State Farm products. We used to just end the conversation and say, unfortunately, sorry, we couldn't help you this time. That's a bad experience. We have very fine-tuned every component of our relationship to say, hey, Your best option is State Farm. We can't get you that today, but here's what we're going to continue to do over time. You're going to rate review. We're going to continue to find it. We're going to do all these things. Your lender's been a great partner of ours, and we're going to continue to support them. That small change in how you terminate the conversation is a big deal, because now it's not the lender or us who was unfortunately not able to help. We're here to continue to support you because this loan is going to be in place for a long time. Right? Or maybe if it's at 7.5% or 8%, maybe not, but the ones at 3 are going to be there for a long time. And really taking that sort of customer for life mindset and experience has been really important for us. We have the ability for customer portal, like where a customer can manage their insurance policy, to be installed inside of your portal. So if a customer logs in to make a payment or anything in servicing, they can also see their insurance score and see all these components, and thinking about sort of the experience for the customer, putting the customer first, a lender first, and making sure that we're focused on them and not on us has been our mantra sort of the entire time. And look, these are your customers. We're 90% mortgage. We don't go try and get our own customers. We only try to make sure we're helping yours. And it's a reflection of your brand, and can influence whether or not you get another loan in the future. We have some customers who tell us that the recapture rate on a customer that refinances is almost 3 or 4x higher if the customer got a policy from us than if they didn't. So if you're like a servicer, you're thinking about recapture in the future, the data says make sure they get a policy from us, or they work in our experience ahead of time, because then it'll be easier for you to recapture them when the time comes. You're bringing them value throughout the life of the loan, not just at the time when you want to refinance.
Yeah. Yeah, I've heard pushback before about, people are concerned about partnering with such important services when in the buying process, and they're like worried about how it reflects on them. And I think Matic is the prime example of, actually it might make you look better than than how you look today. So no risk on the PR side with those NPS scores. So congratulations to you and your team on that. So that's about a wrap on today's SIP, if you can believe the time has gone by that fast. Ben, if lenders want to learn more about Matic, and where can they find you and your team to get additional information?
You can check us out at Madick.com. In my profile video here, you can see Ben at Madick is my email. Happy to respond if you want to be a nerd with me and nerd out about mortgage and insurance. Talk about insurance pricing and how it relates to MBS pricing, mortgage. Like, I'm happy to. Those are the things I think about and have fun doing. So you can reach me at ben@madick.com, and we'll have a good time.
Awesome. Thank you so much for your sponsorship today. We truly appreciate the knowledge that you've shared. And Matic continues to be a very valued partner of the Mortgage Collaborative. And what I would challenge all of our listeners is, don't sit around and wait for things to happen in the market. Make things happen. And when you come out on the other side of it, you're going to be further ahead than your competition. So thank you all for joining us today for a very collaborative conversation. We'll be back next week on Tuesday, June the 3rd. It's hard to believe that we're already entering halfway through 2025, but that is at 2 p.m. Eastern for all of our TMC community, and live at 3 p.m. Eastern time with the industry on LinkedIn. Thank you for taking the time to be a part of the SIP. Your engagement makes a difference, and we're excited to continue sharing ideas and elevating the industry together. Cheers.